Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. Playboy's iconic brand is eroded by debt and poor management. Why JD Sports is a better buy than Foot Locker. Holy smokers, this ain't no dang jokers. I couldn't believe my eyes. Tesla stock just blew my mind. I did a video saying I am going to buy heavy on Tesla at 150. What a joyride, man. That's easier than riding in an FSD in a Model S effortlessly. Today, I want to delve into the concept of brand moats and explore whether they can erode or decay over time. I will talk about two retail stocks that are related to fashion. They are JD Sports Fashion and Playboy. But I mean, the reason why Tesla stock can make such huge moves so effortlessly, it's all about Elon Musk's brand and Tesla brand. Some brands have hype. Some have lost its mojo.
You brought back the jet. Is there any chance you would bring back the mansion?
There is. So the mansion will come back in the future. And then I can see a world down the road where we have physical mansions as well. This is all part of that lifestyle. I could see a world where we have a Playboy yacht down the road. These are all ways for creators to be involved with the brand, and I'm happy to give them a ride on the plane.
How do you measure success for this project?
I think it's hard to measure direct success for this project. What I would say is it's all part of our brand. I believe brands are living and growing organisms, and you have to constantly invest in them. This is part of our brand marketing expense. And so we're not a brand historically that spends tens of millions of dollars taking billboards out and in traditional advertising. But what other brand can bring a plane to life like we can? We are a lifestyle brand. This to me is one of the most aspirational signs of lifestyle. And eventually we might even make it available to some of our best members at Playboy Mansion.
Brand really matters. But in fashion brand, image can be eroded just as easily and be forgotten about, leaving people holding their heavy bags. Playboy, it's a magazine, a series of nightclubs, a website, a mansion, a reality TV show, and one of the most recognized logos in the entire world. It isn't enough to call Playboy a company. It's an empire. To some people, Playboy is luxury, glamour, the mascot of sexual revolution. Playboy is one of the world's most iconic and recognizable brands with a global brand awareness of 97%, but a series of missteps has taken the stock down to a $1 penny stock. The company is now valued at less than $80 million. It's priced to go bankrupt. Playboy has gone from being one of the biggest SPAC winners to one of its largest losers. Shares are down 97% from early 2021 highs. In response to the plunge and the stripped balance sheet, Playboy has essentially abandoned its entire strategy. The decision has some logic, but there's one key problem. The same CEO tasked with executing the prior strategy remains in charge of planning going forward. When it comes to Playboy, it still owns one of my favorite lingerie brands, which is Honey Birdette. I love honey more than Victoria's Secret. This is what Ben Cohn, chief executive of Playboy Group, just said. In 2023, we worked on 5 main goals. First, restructure the company and move to a capital-light business model. Second, reduce overhead. Third, stabilize and reposition Honey Birdette back to a premium brand. Fourth, move our China business to a JV model with better accountability and control. And fifth, grow our creator platform. The Playboy Club, we made major progress on all 5 goals in 2023. At Honey Birdette, we brought back the former CEO from when we first purchased the business, reduced the number of sale days by 34% year over year, changed our shipping policies, and replaced our North American third-party logistics and global freight forwarder. identified 4 stores with negative 4-wall EBITDA margin contribution for closure, one of which was closed in 2023, improved our product quality, and most importantly, returned Honey Birdette to the boundary pushing designs which it was known for in the past. These changes resulted in a strong fourth quarter of 2023 for the business, as evidenced by a 14% increase in sales as compared to the fourth quarter of 2022. Our goals for Honey Birdette in 2024 are to increase our average selling price and gross product margin by continuing to elevate the brand by further reducing the number of days on sale, to increase product pricing by 10%, and to focus on selling higher margin items at higher price points. We also plan to introduce a Honey Birdette loyalty program to create a better customer journey across our brick and mortar and online channels. Direct-to-consumer revenue from continuing operations declined 26% year over year to $78 million in 2023. During the year, revenues from Playboy.com e-commerce declined by $16.6 million as the company completed the transition from an owned and operated model to a licensing model. In addition, revenue from Honey Birdette decreased by $10.7 million or 13% year over year to $72.9 million from $83.6 million. Honey Birdette reduced the days on sale during 2023 by 34% in an effort to protect brand integrity and combat rising production and distribution costs. Total net loss of the company for 2023 was $180.4 million, an improvement of $97.3 million from a total net loss of $277.7 million in 2022. I am glad they brought back the former CEO for Honey Birdette because we know Ben doesn't know what he is doing. He likes to buy high and sell low. That's his track record at this point. He's taking such a huge Playboy empire and reducing it to $80 million. I would say based on the number, Playboy's brand moat has been eroded unless we have a new CEO that can make a change. Even that's hard. I just look at Foot Locker. Right now we have Mary Dillon, a top CEO from Ulta Beauty, which is a 10x stock, by the way. She is trying to turn the ship around at Foot Locker. Foot Locker stock is down 30% year to date. The company is drowning in debt. Speaking of debt, Playboy has a debt to equity ratio of 4.8. I think that is very bad. However, when you look at Victoria's Secret, VSCO stock has a debt to equity ratio of 6.5, which is even more scary. I have not really talked about that many UK stocks on the channel, so I wanted to give a shout out to another UK stock. So we're going to go through this one here today. It's JD Sports Fashion. It's a Foot Locker huge competitor in the US and more importantly, in Europe. JD Sports Fashion has proposed to buy American athletic fashion retailer Hibbett Incorporation for about $1 billion. As Britain's biggest sportswear retailer looks to expand across the southeastern US, the deal comes as shares in athletic clothing retailers come under pressure globally after weak outlooks from sports apparel makers such as Nike and Puma. Last month, JD's U.S. rival Foot Locker also warned on 2024 profits, though Adidas last week hiked its 2024 forecast on strong demand for the German sportswear giant sneakers. JD Sports, which sells Nike, Adidas, Hoka, and other sports brands, said last month it expects the Euro Soccer Championships, Paris Olympics, and new styles of trainers and tracksuits would spark life into the lackluster market. It will pay $87.50 per Hibbett share in cash, representing a premium of about 20% to the U.S. firm's last closing price. Hibbett's shares were up 18% to $85.70 in pre-market U.S. trading. JD's acquisition of Hibbett, which has about 1,169 stores across 36 U.S. states, will extend its breadth in the country from coast to coast. It already owns Shoe Palace, which has a big presence on the U.S. West Coast, and DTLR, which is established in the East. JD Sports shares, which have fallen more than 29% so far this year, present a very deep value for U.S. investors. The JD stock traded on the London Stock Exchange has a free cash flow yield of 13.6% with a gross margin of 48%. It's very high for a retail sports fashion business. Foot Locker's gross margin is only 27%. JD Sports might have a moat. I mean, that is just a very cheap price. For a revenue-growing, profitable company, it gives you more margin of safety than the U.S. Treasury's risk-free rate. Also, UK stock market valuation, PE, is at 16.9 now, way below the 10-year average of 21.9, while the US stock market S&P 500 PE is at 33.7. It's 66% above the modern era market average of 20.3, suggesting the US market is overvalued. The enlarged group would have combined revenues of about £4.7 billion in North America. JD Sports said, adding that the region's contribution to total sales would increase to about 40% from its current 32%. The deal is expected to add to the British firm's earnings in the first full year of ownership, with cost of savings expected to be at least $25 million. JD said. The Bury, Greater Manchester-based company said it expects to fund the deal and refinance Hibbett's existing debt through its U.S. cash resources of $300 million and a $1 billion extension to its existing bank facilities. I think the current share price significantly underestimates the business long-term potential, longer term, though it is hard to imagine that there will be negative structural shifts in demand. JD has a tested and proven business model that thrived following the 2008 financial crisis and since. In other words, the company is very cash flow generative and is busily investing a large part of its cash flow in its own ongoing growth. Looked at from that perspective, if one believes in the long-term growth story, I see JD shares as underpriced. Of course, when I say valuation looks attractive, you can say so does Playboy. It's only $80 million business. Well, it's $80 million business that's losing money year over year. That's certainly no value to an investor, but JD Sports is profitable and their competition, Foot Locker, is not very profitable at this point. Foot Locker has a forward PE of 18 compared to JD's forward PE of 9. So JD Sports looks very attractive in my eyes.
We tend to sell everything that's provocative. It's all about the bedroom at Honey Birdette. It's all about sex, obviously. It was quite sensuous, quite high-end, and we believe that the market wanted it and was ready for it because it was readily available in places like Europe. My mother had run lingerie shops while I was younger. I was quite familiar with lingerie, so I was in love with it from an early age as well. And so we sort of got talking over a champagne one night. We just said, and I suppose the idea for Honey Birdette sort of germinated from there. We actually came up with the name for Honey Birdette that night. So we sort of came away from the sex shop, came up with the name, I think it was Honey Bird, and we decided to give it a bit of a French flavour, so it became Honey Birdette. And we decided that Honey Birdette was going to have a personality. It wasn't going to be just a normal shop, it was going to be experience-based, and Honey Birdette was going to be someone. Is anyone involved in retail here? Great, okay. Stock is king. When I first set up Honey Birdette, I had 6 bras on 1 puck and 3 books on the shelf. I was all about white space. Janelle would say to me, can't you put some more books up? I said, no, it's all about minimalism, white space. So we had a business partner that eventually came on board, and he came into us and he said, stock is king, get some more stock on the shelf. We put 100k worth of stock into that store and it started to make money. No one wants to take the last piece of cake, and that's what we found out. We make sure everything's clean, we make sure everything looks spectacular in the store, so do come and see them. So you walk in there, the shop's stocked up, you feel confident that it's a good business. And the only reason we were able to do that was because we were so passionate about what we were doing, and we're getting just fantastic feedback from customers as well. Customers really loved the store, they really supported it, they told all their friends, they just got absolutely passionate about it, which made us even more passionate. As long as you become passionate about it, it will get you through the hard times, because there were some really hard times.